foreign investment in Mexico, Latin America, and the AI race, and high tide for the right in the region. Hello and welcome to this edition of the Weekend Sentinel from Latin America Risk Sentinel. Every Saturday, we take a look back at the three top stories for the week and give you our view so you are better informed and ready for Monday morning. Thanks for being with me today. Latin America Risk Sentinel at LatinAmericaRiskSentinel.com helps you turn risk into opportunity. I'm Wayne Trevette II, your Latin America Regional Specialist. Be sure to start your day with our complimentary email, Morning Latim Signal, for the one big story that you can't afford to miss. Simply visit bit.ly/daily and the letter B. In our first report today, you learn more about foreign direct investment in one of the largest economies in Latin America, Mexico. Then, how the AI race is developing in the region. And finally, taking a step back to look at the cautionary tale of the right's rise in recent wins in Latin America. Let's get started. Mexico, the second largest economy in Latin America, remains one of the Latin America's strongest foreign direct investment destinations. But the better signal is not simply the headline number. The better signal is composition. Mexico received more than $43 billion in foreign direct investment in 2025, making it the second largest recipient in Latin America after Brazil. That keeps Mexico at the center of the region's capital map. But 64% of those inflows came from reinvested earnings. That matters. Reinvested earnings tell us something different from new announcements. New announcements show intent. Reinvestment shows commitment. Companies already operating in Mexico are leaving profits in the country, expanding locally, and treating Mexico as a base worthy of maintaining. For business leaders, the headline is FDI. The investment signal is permanence. The complication is that the announced projects fell sharply. That means Mexico is not getting a clean, risk-free near-shoring boom. Existing investors remain committed, but fresh project momentum is, well, a little bit more uneven. Services gained ground, manufacturing cooled, and the upcoming USMCA review now becomes more important. So the business question is not, is Mexico still attractive? It is for CEOs and other business leaders. Mexico still offers scale, proximity to the U.S. market, and supplier depth. For investors, the 64% reinvestment figure says many companies are not treating Mexico as a short-term trade. They are instead treating it as a durable operating platform. So, what is likely next? Expect Mexico to remain as a top regional destination for foreign direct investment, but with more selectivity. Companies will watch the USMCA review risk, tariff uncertainty, energy reliability, and security conditions before committing new capital. The watch point for the week: do not track the total FDI number. Track the split between reinvested earnings and new project announcements. That split tells us whether Mexico's capital story is deepening or simply holding. The bottom line: Mexico's FDI story is still strong, but more mature. The capital is not only arriving, much of it is staying. Ahead of the USMCA review, permanence may be the business signal that matters most. Next, let's turn our attention to Latin America and the artificial intelligence race. Latin America may not be leading the global race to build frontier AI models, but that doesn't mean it's a bystander in the region. The better business signal is infrastructure. At the Forte de Copacabana International Security Conference in Rio de Janeiro, Celso Amorman, a senior advisor to President Lula of Brazil, argued that Latin America and Europe are largely bystanders in the US China AI race. As a geopolitical statement that captures one truth, the world's dominant AI platforms, chips, and model ecosystems are still concentrated outside Latin America. AI competition does not depend only on algorithms, though. It depends on power, land, connectivity, cooling, data centers, and cloud capacity with political permission. Once the lens widens to infrastructure, Latin America is no longer sitting on the sidelines. Brazil, Mexico, Chile, and Colombia are becoming more important to the AI build out. Data centers need electricity, cloud platforms need latency reduction, companies need local processing capacity, and governments are debating where data should sit, who can access it, and which providers should be trusted. That makes AI a Latin America business story. For business leaders, the impact reaches operating strategy. AI infrastructure can affect energy demand, digital resilience, cybersecurity, telecom investment, and site selection. But the opportunity carries constraints. Data centers can strain electrical grids. Cooling can raise water concerns. The countries that win AI infrastructure investment will not simply be the largest economies, they will be the countries that can combine energy reliability, permitting discipline, connectivity, and political trust. The watch point is not whether Latin America builds the next Chat GPT. The watch point is whether the region becomes a trusted infrastructure base for the AI economy. And our final topic, high tide for the Latin American right? Latin America is not turning right in one uniform wave. Brazil and Mexico are still major exceptions, but across several important markets, voters are rewarding candidates who promise tougher security, smaller government, and more market friendly policy. Argentina has Milei. El Salvador has Bukele as the region's security model. Chile has elected Jose Antonio Cast. Colombia has now chosen Abelardo de Espriella after a narrow runoff with Ivan Cepeda accepting the result. The signal is not ideology alone. The signal is more about voter frustration. Crime, slow growth, weak public services, and fatigue with incumbents are producing a demand for faster answers. That demand is pushing security, fiscal, and investment policies back to the center of the business risk map. For business leaders, the opportunity is clear in some places. Governments may become more open to private capital, infrastructure, concessions, energy development, and security spending. For investors, the headline sounds more positive, more pro market rhetoric, tougher crime policy, and less hostility toward business. A rightward turn does not automatically reduce risk, but changes the kind of risk. Security first governments may improve confidence if they reduce crime and restore territorial control. But they could also increase legal challenges, human rights scrutiny, street protests, and institutional conflict. Colombia is the immediate case to watch. De la Espriella brings a hardline security agenda, market friendly messaging, but he inherits a polarized electorate and a fragmented political environment. A narrow victory gives him a mandate, but not a blank check. Brazil is the major forward looking caveat. Lula is seeking another term, his fourth, in October of this year, while Flavio Bolsonaro, the son of jailed Jair Bolsonaro, the ex president, is trying to return the Bolsonaro name to power. If Lula holds, which seems likely, Latin America's rightward pattern remains powerful but incomplete. If Bolsonaro can pull it out and win, the regional political map changes more sharply. What is likely next? Expect investors to reward credible pro market signals, but punish disorder, fiscal slippage, or policy overreach. Markets usually like reform language and implementation even more. Latin America's rightward turn is real in several markets, but not uniform. The business signal is not right equals good for investors, but the business signal is more that security, markets, and state capacity are becoming the next investment filter. Well, that's your weekend signal for June 27th, 2026. Thank you for being with me today. We looked at foreign investment in Mexico, Latin America, AI, and the race between the US and China, plus the rightward turn maybe reaching its highest point in Latin America with the latest election in Colombia. Be sure to start your day with your complimentary email Morning Latam Signal for the one big story you can't afford to miss. Learn not just what happened, but what to watch for next. Simply visit bit.ly/daily and the letter B. I'm Win Trevetta II, your Latin America regional specialist at LatinAmericaRiskSentinel.com.